Bitcoin, the world's largest cryptocurrency by market capitalization, surged 18% to over $24,200 over the past 24 hours. The surge has been attributed to a short squeeze and liquidation of $300 million worth of crypto positions. Additionally, recognition of the fragility of the central banking system has also been thought to be a contributing factor. U.S. regulators said they would create a deposit insurance national bank to protect insured depositors of Silicon Valley Bank. President Joe Biden called on Congress and bank regulators to strengthen rules for financial institutions. This article discusses how Bitcoin surged 18% to over $24,200 in the past 24 hours despite the fallout from the implosion of Silicon Valley Bank. It attributes the surge to a short squeeze that sent prices higher and investors recognizing the fragility in the central banking system. The article also explains how U.S. regulators created a deposit insurance national bank to protect insured depositors of Silicon Valley Bank and President Joe Biden's call on Congress and bank regulators to strengthen rules for financial institutions. Overall, this article illustrates how the BTC surge is an indication of how market sentiment is shifting in light of the financial instability in the banking system. This week has been a wild one for the cryptocurrency market. As Bitcoin, Ethereum, and other major cryptocurrencies are braced for extreme volatility after Circle's $43 billion USDC stablecoin lost its US dollar peg. Bitcoin and Ethereum have since recovered after the US government stepped in to prevent a potential banking crisis from spreading. Alex Kupitsikovic, a FX Pro senior market analyst, warned potential buyers to wait for a fix above $23,000 to confirm a bullish reversal. The Bitcoin price rebound was triggered by the Treasury Department, the Federal Reserve and the Federal Deposit Insurance Corporation announcing that all Silicon Valley Bank deposits would be protected after the bank failed. Additionally, a similar announcement was made for New York-based, crypto-friendly Signature Bank. This was due to the Federal Reserve hiking interest rates. This caused the value of the bonds to drop and led to SVB being forced to sell government bonds at a loss. Despite the U.S. government's intervention, the crisis at startup lender Silicon Valley Bank has caused the second largest stablecoin by market capitalization to lose its peg. Coinbase has suspended US dollar USDC conversions while banks are closed over the weekend. Tether's USDT, however, is still holding its dollar peg. The events of the past week have demonstrated the instability of the market for major cryptocurrencies like Bitcoin and Ethereum. The U.S. government's intervention in the Silicon Valley Bank crisis has resulted in a market rebound, but the situation still highlights the need for greater oversight and regulation in the crypto space. The failure of the crypto-friendly bank Silvergate and the subsequent panic at Silicon Valley Bank, which held a portion of Circle's USDC reserves, have created an environment of uncertainty and volatility. As a result, the price of Bitcoin and other major cryptocurrencies have dropped significantly. The situation has also caused a spike in Bitcoin transaction fees as traders attempt to secure their crypto. It is clear that more regulation and oversight is needed in the crypto space in order to protect investors and ensure market stability. Tatiana Koffman is an angel investor, author and creator of the weekly newsletter Myth of Money.com. The recent collapse of Silicon Valley Bank, Silvergate Bank and Signature Bank have caused U.S. bank stocks to plummet. The cryptocurrency market has experienced a double-digit rally. Bitcoin was created as a response to the great financial crisis in 2008. Its creator, Satoshi Nakamoto, left a message in the code to remind us to stop trusting centralized institutions. The Great Reset is a concept that advocates for us to look at other options outside of the traditional financial system, such as decentralized currency like Bitcoin, to store our wealth. People are beginning to opt out of the traditional system and Bitcoin will be the chosen currency of the Great Reset. This article by Tatiana Koffman provides an insightful perspective on the recent market turmoil, which has been caused by the failure of Silicon Valley Bank, Silvergate Bank, and Signature Bank. These events have created a ripple effect, with U.S. bank stocks plummeting and the cryptocurrency market experiencing a double-digit rally. Koffman explains that the Bitcoin network was created as a direct response to the great financial crisis of 2008, when people felt that the government and the financial system were working against them. She argues that now is the time to heed this message, as the sequence of events of the past week have highlighted the errors of human centralization. The article goes on to explain the implications of the failure of Silicon Valley Bank on the stablecoin market, particularly USDC, which is run by Circle. The incident has served as a wake-up call to investors, as it demonstrates the risks of trusting centralized entities, even those that run our stable coins. Koffman argues that Bitcoin's beauty lies in its ability to store value in a decentralized manner, without requiring humans to validate or support it. She argues that Bitcoin was made for this moment and that the Great Reset presupposes a future where Bitcoin is the most valuable asset and the ultimate measure of value. Ultimately, the article provides a thought-provoking perspective on the current market environment and how Bitcoin may be the answer to our current financial system. SHA-256, a secure hashing algorithm, was developed by the National Security Agency in 2001. It is widely used for data encryption and is the foundation of Bitcoin. Bitcoin is a US invention and is designed to be mined and held for decades, with the last available Bitcoin expected to be produced in 2140. Currently, close to 92% of all Bitcoins have already been mined, leaving approximately 1.7 million still up for grabs. The digital transformation is expected to drive the price of Bitcoin up, and it has already achieved a market cap similar to Visa and MasterCard. Billionaire investor Tim Draper predicts that Bitcoin could hit $250,000 by the end of 2021. Cathie says it could go as high as $1.5 million in 7 years. This article provides an insightful overview of the SHA-256 algorithm and its use in Bitcoin, as well as its implications for the world of digital assets. The author outlines the history of the algorithm, its strengths and its association with the US, and then moves on to discuss recent developments in the crypto space, including the rise of ChatGPT, and the current market cap of Bitcoin relative to that of other assets. Furthermore, the article touches on the potential of Bitcoin to reach certain price points, as predicted by some investors. In sum, this article paints a comprehensive picture of SHA-256 and Bitcoin, highlighting both the potential and risks associated with the digital asset.